Hello and welcome to the Innovators panel. I'm David Grasso of GenBiz, and today we're discussing the Democratic candidates' wealth tax proposals. Here to weigh in on the topic, we have liberal commentator Alicé Anil. We also have investor David Levine and the host of the POV show, Daniel Morchy. How are you guys doing today?
Doing great. Thank you for having us.
So let's jump right in. Unlike an income tax, a wealth tax is assessed on the value of someone's personal assets. My question is, how do you put valuations on an asset that is not for sale, especially tricky things like a baseball team or a newspaper, etc.? We'll start with you, Alicé.
That's actually the hardest part about the wealth tax. Even though it's an incredibly popular plan, according to a New York Times poll, about 2/3 of Americans support it, even over 50% of Republicans support it, even a number of millionaires support it. The hardest challenge is, how do you measure wealth, like you said? So how do you value an art piece, for example? Or even if you if you're an owner of a company and it's valued at a certain number, and but for instance, with Jeff Bezos, he pays himself $100,000 salary.
Daniel, what's wrong with this?
Well, what's wrong with it is the rich don't have enough. And now that sounds crazy, but you mentioned Jeff Bezos. First of all, his salary, I think, is closer to $81,000, so pretty modest for a CEO. And that is most of his net worth of $110 billion is tied up in illiquid assets, as you're saying. And he would have to, in order to come up with the billions and billions of dollars that he'd have to pay in this wealth tax, he would have to sell off billions of dollars worth of shares. That would plummet the stock price of Amazon, and that doesn't seem like a very healthy way.
David, what side are you on here?
Can I jump in here? I'm actually right in the middle. So I firmly disagree with Jeff Bezos. Fortunately, has a very liquid asset. So to answer your question about how to price things, thankfully, Amazon stock, we know how to price Amazon stock. It's very liquid. There's billions and billions of dollars of Amazon stock that trades every day. Therefore, you could liquidate that sort of thing. For private assets, there's a very active private equity market. There's about $3 trillion in private equity. So certain transactions happen very frequently. Baseball teams are actually relatively easy to value. There's a lot of baseball teams that trade. Now, where does it get tricky? Well, you're an entrepreneur. You've built a company. You've got 100 employees. That is a little hard.
Yeah, ask WeWork about that right now.
Yeah,
how do you value something that isn't traded on the public market?
And that's the thing that needs to be, I think, done in an appropriately nuanced way, meaning we don't want to discourage entrepreneurship. So if we have early stage private companies that are difficult to value, it's probably a little bit harder to assess the value of that, to place a wealth tax on that. But if it's something that's very liquid, if it's something that's a stock, obviously, but if it's something that's a big private equity company that's worth hundreds of millions or billions of dollars, I think we can assess that.
Well, let's not get in the weeds here. Is this a good idea? We're going to go down the panel here. Alicé, good idea or bad idea?
I think it's a great idea. The biggest challenge is the fact that it's been done and it's been tried in numerous countries up until the early 2000s.
And it failed, right?
And it does not have a great track record. So far now, only 3 countries have a wealth tax left, and that's Norway, Spain, and Switzerland, and they're still mired with problems. So I think that's the biggest challenge that the Democrats, especially Elizabeth Warren and Bernie Sanders, who are really the only 2 Democratic candidates proposing this, will face.
How about you, Daniel? What do you think?
Well, I was going to say, too, in Europe they've tried it. It hasn't not worked out so well. And you've got, the rich are very clever with their money, naturally. And they're going to find every kind of way to evade it. And, whether it's through tax havens or investing in cryptocurrency and all these other things, they're going to find ways to avoid it. And it's not going to be so hard, I don't think.
David, they're going to find ways around it, aren't they?
So just to answer your question, I think it's a fair idea. I do think it's a fair idea because central banks have provided free money to the wealthy for about a decade. So the wealthy have benefited a lot in the last 10 years. But the wealth tax has to be done appropriately so it doesn't discourage entrepreneurship. So it's a good idea, but it's a hard idea. It's a fair idea. Can we pull it off? We'll see. If it's done in an appropriate way, then maybe.
So let's talk about something that happened recently, right? Overnight, there were problems in the overnight financing market because all corporations went to pay their taxes at the exact same time. Couldn't this also cause a crisis when everyone goes to liquidate assets to pay for their wealth tax yearly?
Well, hopefully this will be done in an appropriate way, and again, things will be phased over a period of time. I don't think that people will be, forced to sell their assets all at once. There'll be a wealth tax. It'll be phased over time. You won't have to pay it every year, kind of in the largest amounts.
How about the constitutionality of this, Alicé? Isn't that a problem as well?
Right, I was going to add to what he said. We're also talking about a very moderate tax. Elizabeth Warren now has this chant about 2 cents for every $1. It's a 2% tax on wealth above 50 million. So it's not an enormous, gigantic, it's not an enormous, unreasonable number that I think we'd face that. But the constitutionality of it, yes, that's another major problem.
So wait a second,
the
Alicé, it doesn't work in
Constitution-
Europe and it might be
I know, and I'm a
unconstitutional?
liberal, and I really love the idea. And the more that I read about the various obstacles that it has faced around the world, the more discouraged I get. I don't think the challenges should preclude us from actually trying it. And Elizabeth Warren and her team themselves have said that they have analyzed what has gone wrong in Europe and what they can learn, and they have adapted that to their current strategy.
So Daniel, what's wrong with this?
Well, I feel it feels pretty unconstitutional to me. I would say that it almost feels like double taxation in a way. You know what I mean? Like it's sort of an additional tax to your income, and I don't know. I'd say that, and also, what's the purpose of this, right? Elizabeth Warren wants to cover her all her programs. I think it was something about like $250 billion or something like that. They would,
Yeah, wealth tax won't cover the cost of all the
yeah,
processes, and I want them to address that. Yeah.
they would definitely spend through that in like a day. So.
That's not true.
It is,
Yeah,
but it is constitutional.
It would raise over almost $3 trillion over a span of 10 years, and that would cover universal child care, that could cover free college.
But not Medicare for all, right, Alicé?
We're not a Medicare for all yet, though Bernie Sanders has an even more aggressive wealth tax plan than Elizabeth Warren does, and his plan would partially cover Medicare for all. He would start at 32 million rather than 50 million.
But David, won't this discourage entrepreneurship and damage the economy?
Again, if it's done appropriately, I don't think it will. You know, I think that one of the things that big corporations do is it does discourage entrepreneurship. If you have big corporations, actually startups are down. So what we need to do is we need to change things. Part of this is redistribution. Redistribution means bring money back to the middle class. Middle class can then start more businesses. And if it's done, this is, by the way, constitutional, because taxation without representation is illegal. Taxation with representation, which this is illegal if it's done, again, in an appropriate way that doesn't discourage entrepreneurship. So there's other things that can be done. We can put incentives in place to encourage entrepreneurship while taxing the ultra wealthy a little bit. By the way, there was a tax cut recently for corporations. Corporate taxes are down. So to cut corporate taxes a few percent and then add a 1 or 2% wealth tax, it's really just
Okay,
fair and
we're
right.
out of time, guys, but I want you to get one last word in. Daniel, are we going to see a wealth tax?
I don't think so. So if you're talking about increasing the progressive tax rate too, look at back in the 50s when it was 90%, the 70s it was 70%. They were bringing in about 19% percentage of total GDP, just as they are right now. The rich have always found ways to avoid paying the extra
Okay,
taxes.
David, are we going to see a wealth tax?
I think we will, and I think it'll be done in an appropriate way that's tailored, that doesn't discourage entrepreneurship. That's what I hope.
Alicé, last word.
I hope we get to see a wealth tax. It's incredibly popular. The whole point of it is really to diminish the power of the ultra-rich that they have had in our democracy. So if we are a democratic country and if 2/3 of Americans do agree with this, we should be able to see a wealth tax.
Okay, well, anyway, thank you so much for joining me, and thank you for joining me. We'll see you soon.